Hey guys, back with another daily update video. It is Wednesday, June 24th. It's about 6:13 p.m. So the markets have been closed for about 2 hours now. And what a day in the market. You know, I'm not going to pat myself on the back, but maybe I jinxed it based on my videos from the past 2 days about how I think the big downturn is coming. I mean, still to be seen if this is the beginning of another big downturn or if this was another blip on a bull market and we're going to continue up. But lot of red on the board, right? Not very many stocks were green, and if they were green, they were very little green. I mean, Kroger actually interestingly was up 2.2%. And the last time I remember the stocks being this much red overall, Kroger was also up, I think, about like 0.2%. So I don't know if Kroger is the anti-stock market where it just does the opposite of what quite literally every other stock in the market is doing, but you know, who knows? Maybe we should I should look into getting into some Kroger options, or maybe just even just flat out buying some Kroger shares. But just taking a look, you know, big tech was down at least 2 to 3%. AMD was down 3%. Micron down 3.1%. So not a good day for tech, but not a good day for the whole market in general. So, you know, again, if you were thinking that this is just a blip, today would have been an amazing day to open up some puts on some options. So let's just take a look at AMD. So as expected, AMD opened up pretty much sideways, blipped up within the first 15 minutes, and then just bled off all day long, and actually ended up closing the day, like I said, just under 3% down for the day. So in terms of, you know, and I will say I did think about opening up a put on AMD, but I didn't open any trades today just because, like I said, I'm fearful this week that this might be the beginning of another downturn. But if you were to sell a put on AMD, you can see it's green because prices were up, and look how much they were up by. The premiums on some of these options were up by almost 200%. So they almost doubled compared to what they were yesterday, just because there was such a big downturn in the market today. I mean, I could have probably gotten to AMD if I wanted a 0.4% return on my risk, maybe at $50. Let's see, 25 divided by 5,000. Yeah, that's 5. So I think the $49 strike is going to be a little bit less than 0.4. Let's just see, 13 divided by 4,900. Yeah, that's not even 0.3%. So I could have gotten to AMD at a $50 put. But the other thought that I had, because today is already Wednesday, and that would only be a 2-day expiration option essentially, would be if I didn't believe that this was the beginning of another big downturn, I could have sold the put for the following Friday, so July 2nd. And you can see also the premium values for those puts have also gone up, but not by as much. I mean, they went up by around 100% or a little bit less. But at that expiration date, I could have gotten in at a lower strike. I mean, let's take a look at the $46 strike here. $22 in premium divided by $4,600 in collateral that would require. That's 0.4, actually a little bit over 0.4%. So let's just check the 45 real quick. $14 divided by 4,500. So that's 0.3. So, you know, this was looking a little tasty today where I could sell a put that's a little bit over a week away, and at a $46 strike, which is about what, roughly $6 to $7 away from the current share price, and get 0.4, actually a little bit more than 0.4% return on my risk. And if I were to get assigned those shares at 46, I think that would have been a steal if I think we're still in a bull market. But like I said, I didn't want to take a risk. I had a plan for this week to be all cash, and I'm going to stick to that plan. But I mean, take a look. I can tell that I wasn't the only one looking at this particular option, because compared to the other strikes around it, this strike increased the most compared to the other options. This one was up 175% compared to where it was yesterday. So this was a very popular option, looks like, compared to some of the other ones. But I mean, it's very interesting. I would love to own AMD at 46 on a rally up, but like I said, I'm still not sure about what the market is going to do, at least this week, just because if you watch my video from yesterday, there might be some sector rebalancing or people switching from stocks and equities and getting into bonds. So there's some people out there that think that money is going to come out of the market this week because it's the last week of June is the end of the month when a lot of rebalancing happens, but it's also the end of the quarter when even more rebalancing happens. So I'm going to sit out this week most likely unless something crazy happens tomorrow. And I'll probably end up sitting out early next week as well for the same reasons. But if you were a little bit more risk-taking than I am, today would have been a great opportunity to open up some positions in terms of puts. But let's just take a look at the graph on AMD. So, I was sort of right in that I had mentioned in my previous videos that AMD was just kind of trading up and down, up and down, up and down, pretty much sideways. And it was probably gearing up to have a big break up or big break down. Well, looks like today was a big breakdown. I mean, we went all the way down to $52 a share. And interestingly, the last time something similar happened was around June 12th. And you can see June 12th at around 3:30 p.m. AMD was around $55 a share. And then a little bit later, it dropped all the way down to around $52 a share, right where it is today. And that pattern looks rather similar to what's happening right now, where it was at 55, then it dropped pretty sharply down to 52. So if history is going to repeat itself, then maybe AMD will rise back up to like the mid to low 50s again. So if you believe in that, and to add to that, AMD is rather oversold on the RSI right now. And that would indicate, based on the RSI, that AMD wants to rally back up. Now, the other thing is that it's also near the bottom of the Bollinger Band, which also would signify that AMD wants to rally back up. However, I've been messing around with this new indicator I've discovered called the DMI, and you can see that the yellow line, which is what they call the ADX, is above 25, which it is, and that's what you look for in terms of having high momentum. However, if you want bullish momentum, you want this green line above the red line. And you can see right now the red line is above the green line. So that's the opposite. So that means there's bearish momentum. So this indicator signifies that the momentum with AMD is actually downward right now. So this is part of the reason why no technical analysis is 100% accurate. And you have to kind of pick and choose what you like and what you believe in. But so we kind of have some conflicting TA here. So in my mind, that's a wash, and I'm just going to play off my gut right now. But just to give you an example of how you could use that to analyze what a stock is doing or what direction is going to move. So let's just take a look at Micron as well, because I had traded that, and you can see that Micron has kind of been just slowly bleeding off. I mean, from June 23rd yesterday to today, it's just been in a downward trend. And you can see a similar scenario on the DMI here, where the ADX is above 25 and the red line is above the green line. So that tells you there's, again, bearish momentum. However, the RSI is, again, very oversold. Now, if you've watched my prior tutorial video on the RSI, you know that I mentioned that just because a stock is oversold doesn't mean that it's immediately going to come back up into the middle range or maybe overbought category. It can stay oversold or overbought for an indeterminate amount of time. So you can see that, AMD or Micron has been oversold from roughly 10:30 a.m. today to roughly all day long. So, who knows how long it's going to stay in this category. And you can see the day before that, it was also very close to being considered oversold. So right now, I think the whole market is in a downtrend. And one interesting thing is that I was watching the futures this morning pre-market, and the futures were actually red, or they were down by 0.5%. So I guess that was a bit of an ominous sign and red herring for what happened today. But it'll be interesting to see how the futures are this evening and also tomorrow morning. I think if the futures, in my opinion, are red again tomorrow morning pre-market, I think we're going to have another red day. It may not be as severe as today, but my prediction, or at least my opinion, and again, this is not financial advice, is that tomorrow is going to be another red day if pre-market is red. If pre-market is very green, like not like 0.01% green, but like 1% or more green, then I think we'll have a green day. That's just my thesis or my hypothesis. So take it for what you will. Disney really bled off today. I mean, they still haven't officially announced that they're going to delay opening the theme parks. But now there's been petitions from the Disney workers unions and such that they want the theme parks to not open and they want to delay it. So it's been in the news a lot lately. So I'm sure that's part of the reason, at least, why Disney dipped so hard today. I mean, Disney went from about 116 where it closed yesterday all the way down to 110, and then it rallied a little bit towards the end of the day back up to 112. But Disney was down about $4.50 today, which is a lot. I mean, that's almost 4% for Disney in a day. So, we'll have to see. But if you're a fan of Disney long term, now might be a good time. Again, not financial advice, but now might be a good time to start looking at the stock, because prior to that it was trading in the 120s. But personally, I think Disney still has some room to drop. I think Disney right now wants to trade in between like the 100 to 108 price levels, which will be in this Fibonacci zone here. But again, that's just my opinion, not financial advice. IWM. So IWM dropped also by about a little over 3%, about $4.67. And you can see it had a big initial drop and then just kind of traded sideways for the rest of the day. But, IWM is the Russell 2000, and that's just a very volatile ETF in general, just because it's made up of small and mid cap stocks. But again, IWM we were talking about IWM in the 140s not that long ago, and all the way up to 150. So, I'm glad I did not own any shares of IWM because I didn't want to be caught back holding, because IWM, in my opinion, is one of those stocks or ETFs that once we are kind of officially in a big downturn, IWM is going to get hit hard, in my opinion. I mean, the March low in IWM was about $96. We are right now around $140. So we are roughly $45-ish away from its March lows. I mean, IWM fell from 170 to about 100. It fell 70 points in about a month and a half, right? So if we just want to do a quick percentage, so it fell about 70 points out of where it started at 170. It fell 41%. That's crazy. It fell 41% in the matter of a month and a half or so. So again, I think we have another big downturn. I think if we have another downturn, it's going to be even larger than this one. So I would say, if you really believe that we're going to start dropping hard again, don't buy into IWM until you're at least, again, 40% down. Meaning, if you want to hold IWM long term, my plan is to buy in at like 100 again, or at least start buying in at 100. But I think it'll go even lower and then ride it back up long term over the next few years. But that's just my opinion on the market. Let's just take a quick look at what the popular options were today. Apple was very, very popular in terms of stock options. Look at it. Options on Apple were over 1 million. The next closest was less than half that at Tesla with 430,000. AMD was number 3 actually at 426,000, and the majority of people getting into call options. So that's interesting that if you look, the top 4 stocks are big tech, right? Apple, Tesla, AMD, Microsoft, Facebook is up there. Hertz has become this biggest meme stock I've seen lately. I mean, this is a bankrupt company, and look what they did. They pumped Hertz almost 30%. Let's take a quick look at the graph on Hertz. I mean, this is craziness. I don't understand what people are doing. I feel like they're playing with fire, but they bumped Hertz from about $1.21 all the way up to almost $2, or at least over $2 today. I mean, look at the trajectory of Hertz. This is just craziness. I really hope the people that are trading Hertz are getting in and out very quickly, because I would hate to see someone getting into Hertz right now and then ending up losing all of their money because Hertz, goes under, which it looks like it's going to do. Disney was also pretty popular up there. Actually, most people were in the put side of Disney, which is not a great sign, because maybe they're thinking the same way I am, where parks are not going to open on time and that the stock price is going to go down. So we'll have to wait and see. So I think you guys have liked me presenting some of these charts that I found on Twitter. So I have some more if you'd like to take a quick look and kind of see what I think about them. So here's an interesting graph here where this is looking at the app OpenTable, which, if you're not aware, OpenTable is an app that you can use to basically reserve seats at restaurants. So they're looking at the app data year over year in a few states and also overall in the country. And you can see that, expectedly, the number of people making reservations or restaurant reservations has decreased compared to last year, which that's not a shocker here. But what I do want to draw your attention to is that if you look like towards mid-April to June now, as things are opening up and such, and people are getting a little bit less concerned or less fearful, it makes sense that more and more people are making reservations for restaurants for lunch or dinner or breakfast. And you can see that these lines are growing up. The slope is upward. However, if you look at the end of these graphs, you can see that they kind of all peaked and now they're starting to plateau or even trend downwards. So that tells me that a little bit of fear is again kind of brewing again in the public, where people are having second thoughts about going and making reservations to restaurants. Because you would expect, if things were all gravy, these lines would continue trending upward. But actually in the states of Texas, Florida, Illinois, Georgia, and overall in the United States, the overall graph for US is flat, but the other states are a little bit down compared to where their trend was just a few weeks before. So interesting data there. Here's another graph that I found. So this graph shows a percentage of zombie companies that are in the US right now. And if you're not familiar with the term, zombie company means basically companies that are just kept alive by the government, but really they have no chance of actually surviving. So this would be like a company that has so much debt that they have no way of ever getting in the black, meaning they have no way of ever repaying all their debt, but they just kind of stay alive by essentially living paycheck to paycheck. That's a good way to think about it. Meaning, a good way to think about a zombie company is, let's say you have $1 million in student loans that you have to pay off at some point, but your day job, you only make, let's just say, $50,000 a year, and every year you end up spending that $50,000 on living expenses, food, gas, car, repair bills, etc., whatever. So every year you don't make any money net, you don't lose any money net, but at the end of the day, you still have $1 million in student loans, so you are in debt overall. That's kind of an analogy for a zombie company, where the company has a ton of debt with no hopes of ever paying it off, but they're just kept alive by the US government or whatever, just so they can function day to day, but there's never any chance that they're going to end up ever being profitable in the end. And you can see that zombie companies right now represent almost 19% of US firms between 1990 and 2020, which is kind of crazy to think about, because there are people that, like myself, believe that there's no point in keeping these zombie companies alive. You should let them go bankrupt, because that's just kind of the cycle of the economy and really the cycle of life. Meaning, if you're a company and you're not going to innovate and adapt to changing times and produce new products and such, then you deserve to go under and let another company that may be more in tune with the current times do your job better. That's just the natural life cycle, I feel, of the economy. But in my opinion, we're actually hurting the economy by keeping zombie companies alive, because you're just feeding money, but they're already dead. So it just doesn't make any sense. Here's another graph. This one is very interesting and kind of scary. So this graph looks at the put-call ratio over the past 21 days. And the interesting thing, and so these are the years in the time graph on the x-axis below. So one interesting thing is, you can see here, this is where we are. And you can see here's kind of 09, between 09 and 010. We are at this kind of red bar level where we are at like peak, at the critical point where we may drop again. So if we look here, this correlates relatively closely to the initial drop earlier this year. And you can see that these points represent every time that this put-call ratio has exceeded this level. And every time, you can see by these red dots in the red color graphs, we've had a pullback by some percent. So minus 9%, minus 2%. I'm sorry, minus 17%, minus 22%, minus 10%, and then recently minus 35%. Well, we are at that level again. So that tells me that, again, we are due for another drop if history is going to repeat itself. So just food for thought. This graph that I saw scares me the most today. Here's another graph that shows, this one is very interesting. So this one looks at the Nasdaq 100, which is primarily made of tech stocks. And if you've been following the news in the market, the Nasdaq has hit all-time highs. But the scary thing is that if you look at the percentage of the members of the Nasdaq 100 that are above their 200-day moving average, that is like 16%. So that means that there are only a few companies, like few big companies like Apple and Facebook and Microsoft, that are propelling Nasdaq higher. The vast majority of companies are not really pulling their weight. Sorry, I was incorrect about that number. The number is actually 45% of members that are above their 200-day moving average. So my kind of supposition is still true in that the majority of the stocks or companies that make up the Nasdaq are below their 200-day moving average. So there are a few number of big companies that are doing really well that are propping the Nasdaq 100 up. So if those few companies, or even some of them, start doing poorly, then they're going to drag the Nasdaq down with it, because there are already 45% of companies of the Nasdaq that are already trying to drag it down. So that's an interesting kind of stat here. And if I had to guess, those companies that are propping it up are going to be companies like Google and Facebook and Amazon and Apple, those big names that have been doing really well in the market right now. Lastly, here's a graph that shows coronavirus cases in the United States compared to the European Union. So you can see that the EU, they've tackled this issue relatively well compared to us, because their cases peaked. They had a very sharp decline, and now they're pretty stable. They still have cases, but the cases are kind of plateaued at 4,000. The United States, however, had a big kind of rally up, just like the EU did. And we had a very slow or much slower decline down, and now we're on our way back up, whereas the EU is still plateaued, and we're at about 27,000 cases right now. So this is concerning. This is straight out of Johns Hopkins University. So, I mean, we should figure out what the EU did and copy paste whatever their plan was, because it worked for them. But whatever we did as a country was not enough, because yes, we did have a pullback, but it wasn't as sharp as the EU, and now we're also rallying back up. And this is one rally that I don't want to see. So overall, red in the market, I would say the vast majority of people, if you had a cash secured put on, chances are you're going to get assigned on it come Friday. So you have your options of possibly rolling out to a larger data expiration, or you could just get assigned on it and then start selling covered calls. It's up to you. Let me know what options you have open and what you think is going to happen, meaning are you going to likely get assigned, or are you going to try and, or your third option is to just buy the position back to close it for a little loss and then be all cash as well this week as well. So let me know what your thoughts are. Let me know how the market treated you today. I'm going to assume that it wasn't very well. As always, leave a comment if you have any questions, and happy trading.